Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome to the Google Trends Hub. Today, we're going to talk about a development that could have significant implications for Alphabet's self-driving business, Waymo. Alphabet has built up considerable momentum over the last few years, with Waymo delivering millions of autonomous rides every week. That's a remarkable achievement, especially considering how far the company has come since its launch almost 7 years ago. However, despite this progress, there are risks due to the startup's uncertain unit economics and the ongoing antitrust lawsuit against Alphabet. We need to take a closer look at Waymo's cash burn first because it's a question of survival. Despite raising over $10 billion in funding since its inception, Waymo remains unprofitable, losing money on every ride it delivers. The cost base is high, with costs tied to vehicle retrofitting, mapping, and fleet management. Waymo owns the vehicles it operates, unlike ride-hailing players such as Uber, which means that the company has a significant upfront expense. Additionally, there are costs associated with data collection, AI advancement, and other activities that drive Google's long-term strategy. The money-losing rides might also be seen as costly R&D spending that generates valuable real-world data. So what does this mean for Waymo? Well, if the company is forced to separate from Alphabet due to its uncertain unit economics, it could face significant challenges. Without Alphabet's backing and ecosystem support, Waymo could struggle to cut costs and maintain its current level of growth. We've got some bad news for you. There's a possibility that Waymo might be broken up as part of the ongoing antitrust lawsuit against Alphabet. The U.S. Department of Justice has been looking into how Alphabet's current organizational structure helps it cement its overall dominance, and units like Waymo are directly in regulators' sights. If this happens, we can expect Waymo to lose out on its hard-won lead. Tesla is set to ramp up deployments of its own robotaxis shortly, which could give the EV behemoth a significant advantage over Waymo in terms of unit economics. So what's next for Alphabet and Waymo? Well, that's the question. With Alphabet stock having declined by about 10% year-to-date due to concerns about the economy, doubts about the growth of the company's search business in the AI era, and the ongoing antitrust issues, investors might be on edge. If you want to stay ahead of the curve when it comes to investing in companies like Alphabet or Waymo, make sure to follow us here at the Google Trends Hub. We'll keep you informed about any developments that could impact these companies' futures.